Hey, good morning, everybody. Today is Wednesday, September 2nd, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Before we get started, a note. Due to a prior engagement, I will not be producing a video market review tomorrow. See you again on Friday. Okay. Stocks plunged again on Tuesday on very heavy trading volume. The Nasdaq traded 2.9% lower, while the S&P 500 lost 3%. It's interesting to note that yesterday, all of the indexes that we follow recorded distribution days, except the small cap S&P 600. What's that mean? I don't know. Just thought it was interesting. The market's been volatile. I would expect that volatility to continue for the foreseeable future. It wouldn't surprise me if we go on to retest recent lows in this market. That being the case, bulls should be cautious. There's no reason for bulls to be buying stocks until we see a follow-through day. A follow-through day is a day, at least 4 trading sessions from the market bottom, in which one of the major averages increases 1.25% on heavier trading volume than the prior day. Declining issues bettered advancers by more than 6-1 yesterday. The New York Stock Exchange advanced decline line remains bearish. New lows continued to better new highs, but not really by an excessive margin yesterday. Our market timing model is on a primary sell signal, but our secondary signal remains aggressive buy. Most traders should continue to maintain stops at their tightest levels, continuing to accumulate cash and perhaps hedge portfolios with contra ETFs. However, our most aggressive traders can begin to selectively buy, keeping in mind that our primary signal is a sell, and buying can be hazardous to your wealth. The O'Neill timing model is indicating a market in correction. The low of this correction was on Monday, August 24th, which means that yesterday was day 7 of the attempted rally. If we don't undercut the August 24th low, we could see a follow-through day any day now. That being the case, it's important that we keep our watch lists up to date. Small capitalization stocks outperformed large again yesterday, continuing to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Our swing timing model is indicating an extremely oversold condition in the market. A reminder, oversold markets can become more oversold. This market's squirrely, and we should continue to err on the side of caution. Again, we're on a primary sell signal while our secondary signal is an aggressive buy. This market's going to continue to be volatile and prone to whipsaw for a while. An aggressive buy signal means only the most aggressive traders among us should venture back on the long side. Our underlying market timing signal is still a sell for conservative traders. Be careful. Okay, what we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power is and get out in front of it. Just a quick note. I was talking to a subscriber yesterday who was a little confused about what we're doing here. What we're looking for is patterns. We're looking for industry groups that cluster toward the top of our 5-day percentage price change. It's those patterns that are going to tell us where the power in the market is rotating to. That being the case, let's see where the strength in the market has been over the past 5 days. Oil and gas services and equipment has been up 12.9% in the past 5 trading days. Exploration and production up 12.5%. Coal operations up 12%. Other wholesale index up 8.2%. And sporting goods stores up 7.6%. We're definitely seeing an energy and retail theme in today's industry groups. Let's take a look at the NASDAQ composite. Yesterday was a really tough day for the NASDAQ Composite. We were down 140.41 points, or 2.94%. We closed the day at 46.36. We closed in the lower portion of our daily trading range, which continues to be a bearish indication. Trading volume was higher than the prior day, which gives us a distribution day. Although we're not counting distribution days anymore because, for you followers of William O'Neill, the market is in a market in correction. It has been since August 21st. Right now, the NASDAQ Composite is bracketed by support down here at 42.92 and resistance up here at 48.88. Our primary market timing signal on the NASDAQ is a sell signal, although we are on an aggressive buy signal for our most aggressive traders. What that means is that aggressive traders can buy here, keeping in mind that buying in this market could be hazardous to your wealth. Most traders should continue to maintain their stops at their tightest levels, continue to accumulate cash, and perhaps hedge portfolios with contra ETFs. Let's see what the S&P 500's up to. The S&P yesterday also had a tough day. S&P was down 58.33 points, or 2.96%, almost 3%. The S&P closed at 1913.85. It also had a bearish close in the lower part of its daily trading range. Trading volume yesterday was higher than the prior day. The S&P is also in a market in correction, has been since August 21st. S&P is bracketed by support down here in the 1867 area. That was the low of the market on Monday the 24th. And resistance up here at the 2044 area. The S&P 500 is on a primary sell signal and an aggressive buy signal for the most aggressive traders among us. In keeping with the theme of where the power is rotating to in this market, I scanned our universal watch list yesterday looking for stocks that are putting in new relative strength highs and came up with two stocks. The first one, Inogen, manufactures portable oxygen concentrators for patients suffering from chronic respiratory conditions. You can see the stock is putting in this base on base formation. The base is a late third stage base. And back in August, we broke out of the third stage base at a pivot point of 45.75. We're now forming a second base with a pivot point of 51.86. Inogen gets an 80% checklist rating. Again, we're working on a third stage base, that's a late stage base, so you want to be a little bit careful. But Inogen has this trend line, which will offer us a little bit of an early entry point for aggressive traders. One of the areas of strength that we've seen in our industry group analysis is the home builders. Next stock I want to take a look at, WCI Communities, develops luxury single and multifamily homes in most of coastal Florida's largest markets. The stock put in this cup and handle base right here with a pivot point of 25.64. Back in the middle of August, we broke out of that pivot point on heavy trading volume and then immediately fell back into the basing formation. This stock can be bought on a break above the 25.64 area by aggressive traders. WCI gets a 72% checklist rating. Let's take a look at some stocks that we may be interested in watching, but before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list, which you can view by going to the pushbuttonstocktrading.com homepage and clicking on blogs, then daily spreadsheet, and then clicking on the link. Depending on the operating system you're running, you may need to click on a dialog box to open the spreadsheet. Once the spreadsheet's open, you simply go down to the Universal Watch List tab, click on the tab, and that will bring up our Universal Watch List. To qualify for our Universal Watch List, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our Universal Watch List. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted,